Although the dollar keeps gaining value, oil continues to hit new peaks. The asset has already jumped to a one-year high. This surge was driven by the news that U.S. crude oil inventories decreased by 2.2 million barrels. Moreover, many energy market experts are confident that stocks are almost exhausted, which threatens the U.S. economy with an energy crisis. However, this scenario is highly unlikely as many exporters will try to boost sales in anticipation of rising fuel prices in the country. As soon as it becomes clear that the worst has been averted, prices will go down. In the meantime, the asset has a chance of rising to $100 per barrel. Such a speculative move brought Brent crude to a new local high. As a result, the quote consolidated above $97 per barrel. If upside momentum persists, the asset will most likely head for the 100 mark. However, its overbought status may dampen beyond activity, thus limiting further gains. Meanwhile, gold prices collapsed to the level of $1,875, weighing down by a stronger dollar. The yellow metal is deeper in oversold territory, but it's not yet time for correction. To reverse losses, the asset needs some forces. However, given forecast for today's US statistics, the market is likely to stand still. Trading activity will probably increase only tomorrow when preliminary data on inflation in the euro area is released. Analyzing the ruble's dynamics, it can be assumed that the market is not interested in a stronger ruble. After all, there was no reaction to stronger than expected macroeconomic data from Russia. In particular, the unemployment rate remained stable at a historic low. Retail sales in Russia rose by 11% to the highest level since June 2021, while economists predicted a 10% increase. Industrial production surged by 5.4%, well above market forecast of a 4.3% rise. Against this background, the stock market rose just above 3,050 points. Thus, the threat of a decline below 3,000 has taken a back seat. The most likely scenario now suggests a gradual rally in the stocks. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us. See you soon.